Hello and welcome to a brand new episode of ET Markets PMS Talk, a show where we discuss the opportunities as well as investment strategies deployed by the fund managers in the popular space of ultra-HNI investing. Well, my name is Janardhan, and today we have with us a very special guest, Sonam Srivastava, who is a founder, CEO and fund manager of Wright Research. Now, Wright Research is a new age investment manager committed to helping people invest better. Now, Wright Research uses scientific, data-driven methods to extract opportunities across assets in the public markets, which help in growing clients' wealth. Now, to discuss more, let me call Sonam to the conversation. Welcome to the show, Sonam.
Thank you.
Thank you for being part of the segment. Now, Wright Research is moving from a research firm to a PMS now. We could say it's the right extension of the services. Tell us why AI-driven and quant-based PMS.
Definitely, Shitej. So like you said, that it's like an organic growth path for us to move from advisory to PMS.
Right.
And we are very happy to, come into this space. I think, that quant-driven investing in India, India is ripe for quant-driven investing. Quant methods are highly tactical. They work well in volatile markets, and India is a place where we have seen in the last 4 years these methods to do extremely well, right? So we believe working with numbers, especially in momentum investing, especially in understanding factors like value, growth, even size, smaller stocks, I think can be extremely beneficial in a country like India, and that is what we have seen in the last 4 years, right? Working in the advisory setup. So, we think taking this out in PMS makes a lot of sense, and these methods have a lot of power, right? They have a lot of benefits to add to the financial market. So, we are very excited about taking this out in the PMS setup.
Right. Sonam, when we talk about AI, I think the first name which usually now comes to our mind is ChatGPT, and the consensus is that it can't be trusted. How well does it work with the numbers or other AI tools for that matter?
Right. So I think talking about ChatGPT is a tool that obviously has its own limitations, right? But
right.
If you use it properly, if you use it for specific tasks, if there's a smart human guiding it, I think it can be an excellent tool, right? Which I think that's why it is getting so much penetration, so much use, right?
True.
So it does have its benefits, but I think AI tools, any system that you are working on, they need a fair bit of human expertise guiding them in the current state of AI that we are in. And we believe that when we use AI or quant methods in investing, right, it's a fairly complicated and a very nuanced area. You have to work with a system that you have to evaluate in different scenarios. You have to look at the best parameters to work with. How well does it work on data that it hasn't seen before, right? So there are lot of numbers, a lot of scenarios to evaluate, a lot of factors to evaluate before you deploy any system. But I think there is a fair bit of benefit of adding these systems as well, right? They can be consistent. They can be, if you're working with a AI-driven system, then you have evaluated in different scenarios, and any scenario that you see right now, you will know how this system can behave. So it brings a bit of predictability in what you're doing, and obviously you can work with large data sets. You can capture so many non-linear things that a human eye cannot capture. So there's a lot of value that these systems do add.
Absolutely. In fact, you manage or Wright manages over 300 crores in asset under advisory. Has the investment trend sort of changed recently? Have you noticed something different from what we used to see earlier as well?
Definitely, Shitej. So Shitej, we've been doing this for the last 4 years in India, and I have been in the market since 2011-12, right? So there is a significant shift that has happened. So if you looked at when we were in the market in, let's say, 2014-15, people would not quant or factors was something that people did not take seriously. Nobody was taking it out, and people thought that this doesn't work or we don't understand it. But now in the last 4 years, especially when the new age investors have come into the market, Shitej, who are coming from tech backgrounds, who are coming from data backgrounds, they want to see technology in their investing space as well. So when we do advisory and when we say that our advisory is driven by quant, there is a significant percent of people who actually come for that, not just for the performance. Obviously, the performance has spoken for itself for quant methods recently, but it's not just about that. People, a section of people, they actually come for the power of technology driving it. So I think there has been a good shift in the Indian market for sure, and I hope that sort of accelerates in the future.
Absolutely. Now, you're here, and we can't afford to let you go without talking about markets. Now, Nifty is trading, sort of near record highs, although we've seen some bit of, profit making on higher levels. We say that one should not look at the index level, but sentiments are driven based on how Sensex and Nifty are performing. So how will the quant work? Now, why we are asking this question is because of the different human biases that we see, in the investor community. So how will the quant methodology work, and is it successful in managing the investing bias as well?
Right. I think, that's one benefit of quant, that, it doesn't have a bias built into it. You can overcome right now, if we talk, like I've been talking to a lot of investors, right? So a lot of them are underconfident that am I going to see a correction, and some of them are overconfident, right? That we are in a bull phase. So an AI system or a quant system will not have that bias. It can be objective. It will be data driven, right? So some of the systems that we look at to evaluate, if this is a good market or is it a risky market, or what will we see in the future. We look at macroeconomic data. We look at index levels, we look at valuations, right? And given those numbers, I think the model can be fairly objective compared to getting all those biases. So I think that is one benefit that quant has, right? That it reduces the element of human bias, and it can be reactive also. So the PMS that we are working with, Kshitij, it's tactical, right? It is something that will also trade actively, right? So if something happens in the market, we'll have methods in place that react to it.
Right. Now, what is your view on the markets as well? Is it running ahead of fundamentals?
Yeah, I think that's a very interesting question, and a lot of people have been evaluating that. So if you look at the valuation ratios for the index, Kshitij, I think historical valuations don't seem to be that high, but if you look at forward-looking valuations, they are sort of peaking, right? We are at 20.2 on the forward-looking PE ratio for the Nifty, and there is a little bit of worry about Nifty being overpriced compared to emerging markets. But if a short-term correction happens at these levels, extremely healthy, right? It won't be driven by any extreme scenario. It will be just a healthy correction on the Nifty, and especially because some of the earnings like Reliance and Infosys have not come that well. We could see some correction, but I think on the overall level, on the broader economy level, if you include small caps, I think the outlook is quite positive, right?
Right. Now, also, Sonam, tell us, how do you pick or sort of filter stocks for investment?
Right. So we have a methodology. Again, it's all systematic, where we try to evaluate. We don't think that any fund or any stock is driven by one person's stock selection, right? We think that there are certain numbers or certain metrics that govern any stock's performance. So valuation could be one, the growth that the stock is showing could be one, the momentum that the stock has is an important factor, right? Similarly, the size of the stock and a number of the risk metrics are extremely important, the quality of their earnings, etc. So we evaluate all of these fundamental as well as technical factors related to a stock using data-driven methods. And then what we try to do, Kshitij, is that in any given market, we try to participate in the most favorable factors. So obviously, when the market is doing well, you will see that momentum investing into stocks that have high momentum tends to do extremely well, right? So that is what we do in healthy markets. But when the market goes through a correction phase, when it goes through a bear phase, like we saw last year, we would see that momentum does not do that well. Maybe value does much better, right? Maybe stocks that have low volatility does better. So our strategy tilts towards those stocks in those scenarios. It's a tactical approach, but again, there's a cost to trading, there's a cost to churning the portfolio. So we don't churn that much. We tactically slowly shift our allocation, and that's how we approach the stock selection process.
Right. Now, in fact, we've talked about PMS. We've talked about how you pick stocks. Now, tell us a little bit more about the risk management practices that the fund will follow.
Right. So I think risk management, Kshitij, is an extremely important part of what we are doing.
Yes.
Right. So in a bullish market, like I said, you can do momentum and you can do better than the market, like momentum has shown in the past. But when the market corrects, that is where if you do strong risk management, you can actually build outperformance at that time as well, right?
Yeah.
So in the market, when the market sort of corrects, what we try to do is we reduce the risk in our strategy. So when you reduce the risk, obviously exposure to high risk factors like momentum reduces, exposure to safer factors increases, right? And that's how the tilt happens. We also include asset allocation component in riskier times, right? So we sometimes deallocate to gold ETFs or bond ETFs. That is one thing that we do. We also have another policy within our fund, which is on deallocation. So if there is an extreme market event, what we will do is we will take out some money. If let's say in a short span of time, in a 2-week time, the market corrects by 10%, and that is an extreme, right? So during those times, we also deallocate. We move to cash a little bit systematically till the correction ends, and when the correction ends, we start reallocating to equity. So those are some things that are built into the fund. Again, we have a very diversified basket of 20 to 30 stocks. Right. We will not have more than 10% in any stock. We will not have more than 20% in any sector. So I think that also, adds to the risk management.
Absolutely. Well, on that note, thank you so much for your time, Sonam. And that's all for now. But do stay log on to etmarkets.com for more on news, business, and economy. Again, thank you so much for your time.
Thank you, Kshitij.